Hey, it's Dan. Welcome back. You're watching iAllegedly. And got a good one for you today because we're going to talk about how far things have fallen and give you an idea of just how bad one sector is that it's just hit rock bottom, basically. Before I get into it, please take a second. Please like the video. Please subscribe to the channel. Don't forget we have an email list that you can sign up for. Sign up for the emails. We had one go out last week. One's going out this week. And you want to be part of that. The refinance industry here in the United States has fallen off a cliff, and it is unbelievable. When you see these numbers, it is just catastrophic how bad it is. And first things first, guys, during the health crisis, real estate absolutely shot up. And we've talked about this, where prices went up as high as 40%. And you had houses in some neighborhoods like Santa Barbara, California, where the average house was $850,000, and that shot up to $1.6 million. Unbelievable. Okay? So that's unsustainable, guys. You just cannot keep having houses shoot up month over month, year over year, and have them go up in value and just, to where it's going to go to oblivion. Okay? The problem with not the dot-com bubble, but 2008, is when you look at what some of these banks thought about, was that when they did financial projections, some of these home builders and home lenders thought that they were going to see homes go up, in the word in perpetuity, forever. They were going to go up, and nothing goes up forever. So give you an idea, people refinance their houses over and over. They do it for a myriad of reasons. Pull money out, buy things, buy another home, whatever, vacation, pay off bills, do whatever. In 2021, think about this. The end of 2021, there was 1.84 million refinances in the pipeline of where people were going to refinance and save money. That's the key. The idea of refinancing your house because you're upside down, that's not going to do anything for you. Think about this. In the last quarter of 2022, there was 9,900 homes that were in the pipeline. 9,900. When you read the articles below, especially the one about how far it's fallen off, it is crazy when you hear these numbers, because what makes zero sense is why anybody would want to refinance their house right now unless they were absolutely upside down financially on their home. So think about this. 6 out of 7 houses right now have a mortgage that is under 6%. 6 out of 7. You've got everybody else that has mortgages above 7%. Number's crazy. You have all the people that are refinancing their house right now that are upside down, that cannot pull equity out because they will pay more money for the equity that they have in their house. So a huge percentage of these people are going to HELOCs, which are the credit lines, and don't worry, honey, we'll pay it off, and I'll do better, and we'll make more money, and I'll work overtime, and all those things. This is the kiss of death right now. This is one thing that's getting people in trouble, that people are behind on their HELOCs also. So the numbers are staggering, guys. When you hear about Rocket Mortgage and all these other credit unions that have done loans below, every single one of them is doing a shade of what they used to do. Nothing. It's a sliver of business compared to what they used to do. When you hear these stories about people that went out and pulled equity out of their house, it was great. You'd be able to save money, drop interest rates. The ideal interest rate refinance is to save at least 3/4 of a point. That's what the experts say. Whether that's true or not, I just don't believe you borrow yourself out of debt, is what I believe. So this is unbelievable, guys, that people have done this, and that they cannot take the money out right now. So you're seeing all these people that cannot pull equity out. Jason Sherrill runs Home Loans Incorporated, said this is such a disaster. You can't hire a staff. We don't have the loans here. We cannot have an office. We cannot have a business that's going to be able to sustain itself because people cannot refinance their house. 85% of the people out there cannot get rid of their low interest rate on their home loan. It's shocking, guys. It's absolutely unbelievable. But the refinance industry is dead. It is absolutely dead. Interest rates, interest volatility is only going in one direction, and it'll go up and down, but it's going to go up. In the first half of February, we saw interest rates shoot up about 3/4 of a point, and people thought, okay, this is bad. It's only going to get worse, guys, because right now, the filming of this video, you've got interest rates above 7%. Now think about this, because I looked this up and called somebody and asked them today, and that was, if you refinance your house, what is considered good credit? Credit score over 720, okay? You need to have 80% equity in your house. And they're doing full appraisals right now on these homes. So if you don't have the full equity in your house, you're done. You don't have the good credit, you're done. Oh, you better have a great job. You better have, backup. You better have a savings account. You better have everything. In other words, we lend money to people that really don't need it, like the desperate people do. So, just hanging out at the lake, walking around the lake. Shocking, guys. The numbers are staggering. Think about this. There are only 122,000 people in the United States right now that could benefit from refinancing their mortgage right now. Isn't that crazy to think about? And again, I don't know how you benefit from refinancing a mortgage when interest rates are so high. So I still don't get that, but these numbers are absolutely shocking that this is happening. It's not going down, it's going up. You're going to see interest rates well above, 8% zone. It's going to happen. And the Fed's only going to raise interest rates even more, which leads to more and more people are using the HELOCs, and they're borrowing more and more money to access the equity in their home, which you can say, oh, it's no big deal. It is a big deal, guys. It's a huge deal right now. And the big deal with this is they're not pulling the money out to advance their lives. They're pulling the money out to pay bills right now, to live right now. That's horrible, guys. That's the sign of the times right now. Credit card debt is at an all-time high right now. The refinance market is dead right now. Why would somebody refinance their home, okay, for a higher interest rate? It makes no sense, unless they were completely desperate, which leads to the next part of the story. And talking to my buddies the other night about the foreclosures and the foreclosure industry got me to talk to people about pre-foreclosure. Let me explain this to you. When you stop making a mortgage payment, you get elevated tiers with the banks. It used to be that, hey, you missed a payment, you may get a phone call. You missed 2 payments, you're on the list, and we'll start sending letters out and things like that. Well, when you get to 3 payments, it's called pre-foreclosure, and then they send a demand letter, and they get people on that list to move it forward to potentially keep you out of actual foreclosure at that point. That list is growing right now. But here's the thing. Talking to these foreclosure guys, they have people that they told me about that had not made a house payment in 30 months. 30 months. What happens with those people? Seriously, you can't. You got a $2,000 a month house payment, 60 grand right now. Hello. What do you do? What, they don't have the money for that. They're never going to have the money for that. Do you have the equity in your house to refinance this place and pull yourself out of this? Who knows? Who knows? It's absolutely crazy. But the pre-foreclosure market is growing. The lack of refinance right now is a huge, huge problem, guys. And it's only going to get escalated. You're going to see more mortgage companies go out of business. You're seeing banks get rid of mortgage lending. Good old Wells Fargo has gotten rid of mortgage lending. Bank of America is going to focus more on wealthy clients, and you're going to see an industry completely close shop. So it's going to be interesting, guys. New builders right now are all they can do right now is get creative with the financing. Some builders, hey, we finance our own homes, we have our own money. The money's still at 7%, guys, for the good credit. If you think that, hey, these guys have 4% mortgages, they don't have that. You can buy down a mortgage and pay it for a limited time, but you're not going to be able to have a 4% mortgage. 5% fantasy land right now. So get yourself ready, get yourself out of debt, Pay your bills off right now. One thing that was sent to me that was kind of shocking was the spammers and the spam callers are getting more and more desperate. Now, if you're on the do not call list, you're not supposed to be called by these people. But there are 5 specific area codes that if you get this on your cell phone, never answer it, because it's a phishing scheme and they want to steal your identity and get your personal information. And I need to just read these. These are 268, which is Antigua, 876, which is Jamaica, 473, 649 Turks and Caicos Islands, and 284, which is the British Virgin Islands. Don't answer the phone from those people. Now, this leads to the do not call list, which a lot of women, for some reason, have me on that. But I have the link below and you can sign up for that. Do yourself a favor and sign yourself back up for that. I keep getting all these different warning signs from banks and from different subscribers that are having problems with spam phone calls. There's a thing called spoofing where your bank, somebody sits there and says, they make the bank say it's Bank of America, but then they've got the wrong area code. Know the number that's going to call you. And again, if you're not sure, if you think that there's somebody trying to scam you, let the phone go to voicemail. Take a message, call them back. Okay? It's that simple. But this is becoming a bigger problem all the time. And you need to stop it. You need to do what you can do to protect yourself, because the scams are getting worse and worse and worse. And Michael sent me a letter today that was pretty interesting about his payment on his home loan. That other people have sent me the same thing. It's kind of odd that 3 people sent me this. And banks are readjusting their automatic payments. Hey, listen, we just set up our automatic payment program, and you need to look at your digital payments that you have scheduled. So if you have an automatic payment for, let's say, a home loan, this guy had a February 28th deduction, March 1st deduction. And he calls the bank and says, what's this about? This is crazy. Well, because there's not 30 days in February, we had to do it twice and you got it within a week. No, it's ridiculous, guys. It should be on that date, on that specific date. So check stuff like this. Check your bank statements, check your credit card statements, check all this stuff, guys, because there's something wrong with the banking system right now. And we're going to be the last to know. Remember that. If you're aware of this, if you're keeping track of it, if you're controlling your own, you're in the, your own destiny with your interest rates and everything, and you're following all the fees and everything, watch this stuff, because people are getting hit with ridiculous fees from these banks. They're doing everything they can to squeeze money out of us. So 2 payments within a week. Oh, it's 2 different months. Ridiculous, guys. Should have had the second payment on the 28th of March and not the 1st of March. So have you been able to refinance? Have you been able to pull money out at a better interest rate? Now, if somebody bought their house and they were self-employed, they've been able to do this. Other people have not. So share your thoughts on all this stuff. Don't forget to hit the like button. Just wanted to do a quick video today for you guys about this. But this is staggering, guys. This is going to destroy the real estate market for 1,000 reasons, because people will not want to sell their house. Why would you sell your house? If you've got a 3% mortgage, do what you can do to keep that house. Okay? Do what you can do to keep the loan. Why would you get rid of it? Back in the day when I was a kid and I first looked at houses in the 80s, they had assumable loans where you could assume a loan, and they're trying to bring things like that back. Whether they're successful at that, we'll soon find out. But this is interesting that we're living through times like this. And remember, the good old days will be the 7% mortgages. Mark my words, they're going to go up, and the Fed is lying to us and telling us how they're going to do everything to avoid a recession, which we're knee deep in right now. Okay? So please don't forget to hit the like button. Please don't forget to subscribe to the channel. And appreciate all the news stories that you guys send me. Hello@iAllegedly.com. And onward and upward, guys. I'll see you guys very soon.